Thank you for this opportunity to present to the American Association of Individual Investors. Most of you know that if you bought $1 of Bitcoin 8 years ago when it first came out, it's worth $10,000 today. But not many people know that there's over 1,000 cryptocurrencies today. And if, for example, you'd purchase Ether, which is used by the Ethereum blockchain, when it had its initial coin offering, our ICO in 2014, that $100 worth of Ether you bought in 2014 would be worth $150,000 today. There's about 5 ICOs coming out every day now, and on average, initial coin offerings so far are returning over 1,000% return on investment. So we're going to look at blockchain technology and cryptocurrencies tonight. My qualifications as an analyst, business manager, and a consultant are outlined on this slide. This year, I moved my consulting practice into entirely blockchain consulting because there's so much revolutionary change going on in this industry, so much disruption occurring that it's a great opportunity for consultants, and because there's going to be winners and losers from this disruption, also very good opportunities for investors. And initial coin offerings are a very good opportunity that are open up to most people now to participate in. So we're going to cover all these topics here. I've got about 40 slides. I'll be going through them very rapidly. And I'd ask you to hold your questions till the end, and I am able to email you these slides if you want to get a hold of them. So first of all, I want to cover what is blockchain. And Bitcoin is just the first real big application of blockchain technology. Bitcoin, as you know, is a cryptocurrency that lets you transfer money at very low cost and has a lot of other advantages. But the key part about blockchain, what they all have in common is, instead of a normal database or ledger where there's some bank or some entity or company that controls the data and everyone else goes into this official source of information, which is all we all know can be hacked, blockchain doesn't do that. It has the database recorded on every computer, and it is a network of computers that processes and maintains and even updates the data. And what the blockchain did, what Bitcoin developed with the blockchain, is a way to do this where there is no person, no company in control. As long as computer systems are on the network, these peer-to-peer transactions following the protocols process transactions, and they do it in blocks. Our logo for Business Blockchain Consultant looks kind of funny as a logo, but it's designed to illustrate what the blockchain is. There's groups of data from the past that are locked together, and I mean locked with hash codes, such that you cannot go back and change old data. You can just add on additions or deletions to an account, updates to a data on the next block of transactions. So what happens is, when there's transactions being made, someone wants to send money, someone wants to update, someone wants to add information to the blockchain, that request for information goes out, all the nodes on the computer network see it, and then the computer nodes compete to group all the transactions together and then compute a hash code that'll lock in the next block of data into the past chain of data. And I'm not going to get into the details of a hash code, but basically if someone were to go back to an old block of data and even add a period, make any change whatsoever to that data, it's going to show up as false because all the computers in the network can see that, hey, this isn't right. Something has been changed. The hash codes don't work. So if you want to change a piece of data back here on the blockchain, you've got to not just handle the existing transactions that are going on and will be quickly processed and then approved by the network of computers, usually by a majority vote of the computers. You've got to go back and rehash, recompute hashes for all the other blocks, and it's theoretically possible, it's practically impossible to do. And I don't know of any instance of a blockchain like Bitcoin or Ethereum ever having been hacked. That's how secure it is, whereas we all know how vulnerable the internet and current databases are. So that's basically what a blockchain is. It's a very secure distributed database that is not run by a middleman. So blockchain technology in business is having huge disruptive potential. Obviously, banks are in trouble because if you've got cryptocurrency and you don't have to go through a bank, their middleman fees, which can be big, are cut out. But it's more than just that. As we'll see later on, there's a blockchain called Ethereum that has smart contracts that's going to start disintermediating attorneys and lawyers and escrow agents and a lot of functions. It's wonderful for security. That's the big vulnerability of the internet, as we all know today, is hacking and that unreliability problem. But any asset that you can create a digital representation of, you can trade and manipulate and do business with on blockchain. For example, I used to work at ConAgra in corporate planning and development. I've owned ConAgra stock for decades, yet I have never seen a physical ConAgra stock certificate. It's represented digitally by data. So land registration, as we'll see, even art, all kinds of assets can be sold and transacted on using the blockchain. When I'm talking about Ethereum blockchain, which today I would say is probably the most valuable and important blockchain there is out there, not Bitcoin. Ethereum was designed specifically to be a blockchain for business use and for flexible use in programming. That's the power of Ethereum. So it was based a lot on blockchain technology that came from Bitcoin, but it's very different. The Ethereum virtual machine, this network of computers, is designed to not just do the normal blockchain functions of keeping data securely together, it's also designed to execute code and run what are called smart contracts. A smart contract which runs on a blockchain is basically, it's a digital representation of if these conditions are met, that data can flow into the blockchain to verify, then it will execute what is agreed upon in the smart contract. So for example, a lot of initial coin offerings are issuing tokens using an ERC20 standard token. That is being generated, programmed, run by the Ethereum blockchain. It's a standard application. And they did all kinds of programming languages that are developed to use on the Ethereum blockchain that are based on things like JavaScript and Python that people are familiar with. So Ethereum has just exploded in activity and business use, and it's very powerful to use. There are a lot of other blockchains out there now and many, many more in development. I want to go through a few of them very quickly. Some of you have heard of Litecoin. That was a variant of Bitcoin. When a blockchain wants to change, if you want to do some different features, some people want to keep the old, you can fork the blockchain, that's the terminology, and create a new blockchain that now will have a different cryptocurrency for it, and it'll have some different procedures. And Litecoin has basically faster processing times than the Bitcoin blockchain has. Monero is a blockchain that has a lot more security. If someone owns Bitcoin on the Bitcoin blockchain, I can see that there's money in the account, but I don't know who owns or controls that account. So there is actually visibility in blockchains like Bitcoin and Ethereum. Monero is designed to hide that information so you can't see. Not only can you not see who owns that ledger, that account on the blockchain, you can't see how much money is there if it's a cryptocurrency. You can't see the information, nor can you see the trading going on in and out of that account. Zcash is similar to Monero in that it can hide a lot more information than Ethereum or the Bitcoin blockchain, but Zcash has the ability to display part of it if, for example, you want to comply with anti-money laundering laws. Another very important blockchain that's under development, it's actually a collection of blockchains. It's called Hyperledger. The Hyperledger is backed by IBM, SAP, the big enterprise resource planning firm, Deloitte, and many other big firms. And I believe, a lot of people believe, that Hyperledger is going to end up being the largest and probably most widely used private blockchain. A private blockchain is one where that network of computers I showed you earlier is not just anyone who wants to come up online and follow the rules and the protocols. To get on a private blockchain, your computer has to be approved to be used, and you're going to follow some different sources of rules most likely. So Hyperledger is developing a wide variety of blockchains and many other applications, and there are other companies developing other blockchains. Ripple is one and used by the banking industry, and there's more and more coming. I'll give you an example now of initial coin offering and an example of blockchain application. Propi is a real estate firm that's started up. It's a blockchain application designed to take title registration in the process of buying property in a house and execute it all through the blockchain. Sounds very ambitious, but there are actually quite a few companies out there and ICOs doing that right now. This one is starting in California to prove the process, but their goal is to be able to have, for example, a buyer in China go online, look at a house and a property in California, and then if they decide they want to buy it, click to start executing a contract, and it will now run through a process using the blockchain. So you're disrupting real estate agents, the companies that handle escrow, because this transaction is going to execute via smart contracts such that when the conditions are met, there may be a house inspection that has to be passed, the title registration, which is going to have to be digitalized from all the different county register of deeds offices. All that is going to be handled electronically over the internet with blockchain for security and execute that way. It's a pretty ambitious undertaking. A lot of people are thinking, well, that's probably not feasible to do. Actually, it probably is going to be feasible. And countries like Sweden, Russia, Georgia, and others, they are nationally undertaking the effort to use digital representation of assets and property, and then the ability to sell and transact in real estate over the internet using blockchain for security. So that's a pretty phenomenal application. Here's a more simple application of blockchain technology. Bridge 21 is a money transfer company. It's not transferring Bitcoin, however. They're taking US dollars in the US, and it lets you transfer them to Mexico convert them into pesos. Now they're using blockchain technology and cryptocurrency in the process, but you put dollars in and you get pesos out in Mexico. So obviously they're going after Western Union to try to disintermediate them. Western Union fees are pretty high. I've heard it's up to 10% in some case. So you can save a lot of money using this. And it's an example of, as I said, over 1,000 different ICOs for blockchains, and then private companies developing applications as well. A very huge area of blockchain application is going to be in the supply chain. I could speak for hours on some of the applications. This is another ICO that's being done that's trying to revolutionize supply chain management using blockchain technology. However, I want to talk for a minute about Walmart, because Walmart is teamed up with IBM and they're developing a supply chain application. And the goal is, for example, if Walmart is sourcing some poultry product out of Thailand, Walmart wants to be able to know if there's a problem that's discovered with this poultry product from Thailand. They want to know exactly where it went through in their supply chain, how it got into their distribution system, and keep track of where it is now. But the power of blockchain goes beyond something like that, which you probably could do over the internet today. The advantage of the blockchain is I can have much better security on the data. There's a big concern for the military and a lot of companies about counterfeit goods. Did it really come from this factory? Did it really go through this port and go through? With blockchain, especially if it's integrated with things like the Internet of Things, blockchain in the supply chain system might be able to pick up and record and put it in blockchain where you can't tamper with the data, that indeed this shipment from Thailand did go through this port on this date and at this time, to verify that it wasn't some other good that got substituted along the way. There are going to be huge applications of blockchain in the supply chain, which means that all kinds of industries are going to be disrupted and impacted by blockchain technology. So blockchain technology and implementing it, it's not just IT, it's huge business process redesign. You're changing the way not just how information flows, but you may be changing other aspects of the business process, which is part of the reason why our company decided to get involved in blockchain consulting, because if 80% of the work is really business process redesign rather than IT technology, folks like me have been doing business process redesign for decades, and it was just a very good fit with our firm and a reason we got into this work. Venture capital firms are feeling a lot of threat and competition from ICOs because an initial coin offering is already displacing venture capital equity investments, and it's going to continue to be that way. Think of how it works from the company's perspective. I either have to give up equity now, or I have to take on debt that I have interest obligations for, or if I can do an ICO, it's basically pre-selling a product or getting injections of funds from potential customers or users of my new system, and I don't give up any equity, I don't take on any debt. From a company's perspective, ICOs are great, and you're going to see more and more use of them. Thus far, initial coin offerings have been largely in blockchain and software development applications. You're going to see, and I'll show you some examples here shortly, of more and more ICOs for traditional industries, using them for expansion or new products or services. Now, you do have to be careful, and any investment in ICOs are no exception. There are Ponzi schemes out there where someone has an ICO and they've got a cryptocurrency in a process that is not going to be viable, and you can probably tell that. And what they're trying to do is to get people to sell coins to someone else, run up the price, and when it eventually turns out that this is not a viable application, not a viable company, the price will collapse and some people win money. So you've got to do your due diligence. And there is risk with even a legitimate ICO because in case, as I said, most of them are software development. So first of all, you've got to worry about, is the software development going to be done successfully? Can they make their system work? Secondly, are they going to be able to get a lot of developers and companies to consider using it, developing applications using their new technology and software? And then third, are they going to be able to grow this business, this application, to enough scale to where it's profitable? So those are three big ifs, and probably for most of these ICOs, most of them probably aren't going to succeed in that. They probably won't become profitable. So the other thing you need to consider for due diligence is security regulatory threats. The SEC has been threatening for a year now that they're going to regulate ICOs and maybe fine some of them, and we'll talk a lot about that later, but it is a due diligence consideration. Anytime you do an investment outside due diligence is a wise thing to do. It's probably more important in ICOs for these reasons. First of all, there is no regulatory registration requirement now, so they're not required to report as much information to you. Secondly, since I pointed out that most ICOs are for new businesses, there is no track record. You can't look at a couple years of financials to see what you might project into the future. So you got a lot more work to do. And then the third thing is that a lot of ICOs have not just the legitimate business potential, but there's a lot of hype around ICOs. Bitcoin and Ethereum and ICOs earning over 1,000% return on investment has a lot of investor enthusiasm, and some firms try to hype that up as they're selling their ICO. So you also have to evaluate that. What is the investor appeal of a crypto token? How much is that going to raise the price of it? And again, we do provide this investment due diligence service. When you're doing due diligence in ICO, you're going to look at things like this. For example, this is Grid, an energy ICO, an energy trading application that's being developed. They're using the Ethereum blockchain. That gives you a level of comfort because, again, that's a well-established, very functional blockchain. They're not trying to invent their own from scratch. They're going to have information on Slack sites and a lot of ICO chatter sites. There you have to be really careful because there are bots that you can purchase that'll make false posts to talk about how wonderful your ICO, and there's a lot of marketing and misinformation going on there. But you could find some legitimate concerns to read about there in a Slack channel or something else. Every ICO is going to have what's called a white paper where they disclose the major information about their company. That's usually the major thing you're going to look at to evaluate them. You look at who's involved in it, who are the ICO advisors, and it's hard to see on this slide here, but there's usually foreign editions of a lot of white papers made because a lot of the people buying ICOs are in China or Korea or Russia or other lands, so a lot of them will be translated in other languages, and that's an indication of the international appeal they might get. When Blockchain Business Consultants does due diligence on ICOs, we go through a process asking lots of questions, looking for a lot of information, of course. And what we do is we normally assess an ICO by looking at a wide range of criteria and using this multi-criteria assessment scorecard. So this is kind of a distortion here on the slide, but basically this continues off to the right. I've just slid it down here so I could blow it up more so it's a little easier to read. But in this case, we're looking at 6 different ICO investment options, and we're comparing by the token speculative value, the business processes that are being involved and affected and impacted in this ICO, the capability of this blockchain. So we look at, for example, the token speculative value, the value it's going to have in changing business processes, what the estimated return on invested capital we think, and again, it's a hard estimate, but what we think this ICO company is likely to use, its probability of success, how hard is it to develop their application, what's the likelihood they'll really be able to deliver, and then there's a lot of other risks and considerations. But we put different weights on some factors and criteria that are more important than others, add them all up, and we end up with an aggregate score that helps us identify which ICOs look like better investment opportunities. We use a similar methodology, but a different approach when we're doing other kinds of blockchain consulting work. We work with companies to help them assess what blockchain applications may be relevant and worthwhile for them to pursue. So in that case, we're looking at a different set of criteria. In this case, we're looking at what is the impact on their business processes from this, what kind of costs are they going to have to develop it, how likely it is that this development will work, not just in software development, but in a lot of blockchain applications, supply chain, for example, example, unless you can get other business partners to agree to work with you and use your blockchain, it isn't going to work. So you've got those risks and factors you need to consider. So overall, we compute an estimated return on invested capital, but consider all the other risks of implementation and getting it successfully adopted. And then again, we come up with a weighted average score. In this case, we were comparing 7 different applications of blockchain technology that this company was considering pursuing. So a lot of investors are starting to flock into cryptocurrencies and what's now called crypto assets. A lot of people are saying this is a whole new class of investments that probably every investor ought to have some part of their investment in. As you know, if you're a sophisticated investor, you know that you're looking not just for a good return, you're also looking for diversification. When the stock market goes down, you want to have some other assets that either don't go down as much or ideally will go up when the stock market goes down. And Bitcoin, for example, has that property very well. As a matter of fact, the Financial Planning Association, which sponsors the Certified Financial Planner designation, they've actually been noting the value of Bitcoin for diversification since 2014. And crypto assets in general may have good diversification processes. It's hard at this point to really judge that. If an ICO is for a company that supports other businesses and the whole stock market is going down, there's a good chance those ICOs may go down in value as well. But it's probably not going to go down to the same degree, and most people are advising their clients that crypto assets are probably a good, not just for the 1,000% return that they've been averaging, but for the diversification advantage for your portfolio. There are a lot of indexes and funds. If you don't want to do individual, instead of stock investments, individual ICO investments in cryptocurrencies, there are index funds and more of them coming. It is expected that futures contracts on Bitcoins, which have been turned down in the past, are likely to be approved fairly soon for people who want to get into that, but that's pretty speculative investing if you're trying to bet on what the direction of price change is going to be on Bitcoin. There are taxes considerations, of course, and it's not entirely clear how this is going to pan out, but so far the IRS has ruled that cryptocurrencies and crypto assets are property and they're treated like a stock, which yields this kind of unusual situation. If you go into a coffee store that'll accept Bitcoin for payment, you pay with Bitcoin and you just had a capital gains event. You got to report your capital gain on the sale of Bitcoin to buy your cup of coffee at Starbucks, which is kind of a silly thing to do, but technically that's what has to happen. Commodity Futures Trading Commission actually has defined Bitcoin differently. They're saying the Bitcoin option is a commodity with some different rules on taxation. And if you're doing mining of cryptocurrency, which we're not going to get into tonight, that is taxed as income. We're now going to go through 5 really fast ICO case studies. The first 2 I'm going to go through are kind of traditional ICOs that are focused on blockchain application development. And I'm going to talk about mainly issues of legality and when I go through these case studies. Is it a token that has equity-like features, which means it's at risk of security violation and regulation in the United States? Or is it going to be a pure utility token, which doesn't have those attributes? And I'll talk about and define that in the next couple slides. The first ICO I want to talk about is probably the most famous ICO that's ever occurred. If you get into blockchain more, you'll find that a lot of people will say the DAO, and you're supposed to know what they're talking about. The DAO is a decentralized autonomous organization, and kind of like it sounds, it was a company formed running on the Ethereum blockchain, and it basically had no headquarters and no one in charge. The people buying the tokens to fund the DAO also controlled it. So they had voting rights and they share in profit from the DAO. And it's basically, as described here, a venture capital fund. If you had tokens, you're going to vote on what projects we were going to fund for development. The DAO was going to fund for development. So that was a neat concept. It was so neat that when they opened up the ICO, they set a record. They raised $150 million of people contributing to this. But the SEC looked at this and said, well, if you're sharing profit, this really is an equity. The other really interesting thing that happened for the DAO, the $150 million attracted a lot of attention. Someone was snooping around and they didn't hack the blockchain, but they noticed that the smart contract had a flaw in it, and they were able to start siphoning off money out of the DAO, and they siphoned off $50 million, basically stole $50 million of DAO money. Stratus is another more traditional ICO. It's a blockchain development, and Stratus is basically developing private blockchains that companies can use to customize. They're working with Microsoft. Microsoft. And again, this illustrates the point that IBM, Microsoft, SAP, I mean, the biggest IT companies are all using blockchain involved. So if you're still thinking that, well, blockchain and Bitcoin, I'm not really sure that's legitimate, it is absolutely legitimate. The NASDAQ, for example, the securities exchange, they've been using a blockchain application to register and store information on private equity sales for 2 years now. So blockchain technology is legitimate, widely in use. This ICO that started in June 2016 raised $600,000, and they started at a token price of just under a penny. That token that was under a penny is priced at $5 today. So it's experienced a 60,000% return on investment. And there are other ICOs like this out there. What you want to look for is a utility token. If you're familiar with Kickstarter, where they're selling, you give money to them and a new company startup will give you a certificate for a new product or tickets to go to a movie, something like that. That's a utility token. And if you have a pure utility token being issued, you should not have any securities regulation risk. So I'm going to show you now some ICOs that have this potential or have done that. P Aquarium, I don't know why they have the P in front of the aquarium, but that's the name of it. This was an ICO, again, was very successful, and basically people from around the world bought their tokens, and what they're going to get then is the ability to help design, approve the design, and the location of the world's largest aquarium, which is going to be built somewhere based on what their token holders vote on. If they just kept it as you get tickets, lifetime tickets or a discount to go to this aquarium, it would have been a pure utility token. But what they did is they also said, you're going to get a share of the profit from the aquarium. And once you do that, you're inviting securities regulation risk. Well, they know that, so what they did is they said, we're not going to base in the United States. They're based in Estonia. And Estonia, Switzerland, Singapore, quite a few countries have said, you know what? We like ICOs, we like cryptocurrencies, and they've adopted laws and regulations that are friendly towards them. And what's happening is a lot of companies and ICOs like Aquarium Company here are locating outside the United States. And this is a reason why a lot of people, myself included, think that the SEC is probably not going to come down hard on ICOs, because if they do, all they're going to do is drive the headquarters staff and personnel, some of the best paying jobs, out of the United States. Another company, ICO, that's been very successful and did a pure utility company is called Kik. They raised about $100 million in their ICO, and it is a pure utility token. You use their cryptocurrency token to use their system, and it's basically a system that kids use. It's another social media type function. But they did not give any profit share. They did not give any equity-like features, a pure utility token. And my belief, and quite a few other analysts' belief, is that this is really the future of ICOs. It's to do massive Kickstarter type applications, letting companies raise equity by selling utility tokens for expansion, new services or products, but don't get any equity features to avoid the regulatory risks in the US. And this last ICO I want to talk about now is Fortitude Ranch. A bias disclosure, this is my ICO. It's both run by my company, Blockchain Business Consultants, and I happen to own the firm, Fortitude Ranch. Fortitude Ranch is the first time an ICO has been done for a survival community. Fortitude Ranch is a combination recreational and survival community. And we're doing an ICO, in this case we're calling it an initial member coin offering to emphasize that this is a utility token. And we're raising money to expand from our current 2 locations to 12 locations in the US and an international location. So we're issuing a Fortitude token. It's an ERC20 token, a standard one running on the Ethereum blockchain. And basically you will buy a Fortitude token to get a discounted price to join Fortitude Ranch, and you get priority to join whenever there is a wait list to get in. So as we expand into new locations, there's a good chance a lot of people will come out and want to join. Most will have cash to join. If we have too many people trying to join or get into Fortitude Ranch, those who have a Fortitude have priority to join. And there's upside potential for the token as a result of that, because if there's a crisis, a pandemic spreading, a 60 Minutes report on the North Korean threat to take out our electric system, something that scares people into having more want to be interested in survival and prepping, demand for Fortitude Ranch will skyrocket, and in effect, the only way you'll be able to join is if you have a Fortitude token, so people who don't have them are going to go out to the cryptocurrency exchanges, try to buy Fortitudes and bid up the price. So that's the upside potential for the Fortitude token. This slide illustrates what I just talked about. When we first issued the token at an equivalent of $100, there's expected to be a 25% jump just because we're issuing the token at a 25% discount to current membership prices. You're protected from price increases, so as the price of joining Fortitude Ranch goes up, not for Fortitude tokens, they can buy at a set number of Fortitudes to get membership of different categories. And then periodically there'll be crises, news events that leads to a jump in demand for prepper services, and thus a spike in the price of the Fortitude token. Now, if you're going to invest with cryptocurrencies, I'm not going to get into the details of how you do it tonight, but I do need to point out the risks involved in it. The good news about blockchain is there's no middleman to have expenses. The bad news about blockchain is if you make a mistake and send funds to the wrong account, there is no middleman to reverse the transaction. If you send cryptocurrency to the wrong account, it's gone. It's gone forever and you'll never get it back. So you have to be very, very careful. And there's some common troubles that occur. For example, Coinbase, which is a good place to buy your initial Ether or Bitcoin or Litecoin. Unfortunately, a lot of people will now try to buy an ERC20 token from Coinbase. You can send your money out, but when the other cryptocurrency token, like a Fortitude, comes back to you in Coinbase, they don't accept those currencies. They only accept those three, and your money, again, is gone and lost. So you have to be very careful using it. What we recommend you do is get MetaMask or another digital wallet, and you just need to start experimenting, learning how to do it. And the first transactions you want to make teeny little amounts. With Bitcoin and Ether and other cryptocurrencies, you can send out 0.000, a lot of decimal places. So you can send out a low amount and practice and learn on it. The other option that some ICOs offer is the chance to buy into an initial coin offering using dollars. We're doing this at Fortitude Ranch. If you don't want to invest in Ether, the cryptocurrency we're using to buy our Fortitudes, you can wire or send a check or do a PayPal button to buy with dollars, and then Fortitude Ranch will hold your Fortitude coins for you until you either want to use them for membership or they can send them back to your digital wallet when you've got one set up and are more comfortable using it. So the concluding points I want to make on blockchain and ICOs is that blockchain really is the second internet revolution. It's going to have huge impact on supply chains, on financing, all kinds of aspects of business operations. And as a result of that, there'll be companies that lose, they get disintermediated, they get their profit margins cut down, and then there'll be brand new companies, new Amazons, new Facebooks that come into existence and give you great investment opportunities. ICOs also are offering great investment opportunities. As I said, on average, over 1,000% as of fall 2017. Ponzi schemes, problems you've got to look out for, but if you do your due diligence and focus on good ICOs, you've got very good prospects for getting a lot of money. If you want to avoid the regulatory risks, stick to utility tokens that don't have equity-like features. Now, every technology can be leveraged for good and bad purposes, and it's going to be the same way with cryptocurrency. A prediction I make is that you're going to see people ransomed for their digital wallet passwords and access to their cryptocurrency. We've already had Bitcoin used as ransomware. Someone will hijack your computer. If you want it back, you got to pay them Bitcoin to have your system restored. My prediction is this is going to be used in kidnapping. Googling, I found no cases yet of someone being kidnapped and held ransom until they turn over and go online and give up their digital money. But I think you're going to see more of this happening as more and more people get into digital investments. I think it's inevitable that gangs and terrorists are going to exploit that technology. And that is, in general, what happens all over. Peter Townsend, an author, has written a book called The Dark Side of Technology, and he's talked about how this is the norm for technology. Every technology we adapt, people say, oh, this is so fantastic, it's going to make society wonderful. The reality is, yeah, it does that, but there are people who are going to use it for bad applications, and he concludes that overall, technology makes us more vulnerable and often has net bad effects on society. The best example of that, I believe, is biotechnology. Right now, biotechnology and blockchain are probably two of the hottest technologies out there. I wrote an article that was published in the American Interest last year pointing out, as other experts have pointed out, that biotechnology is going to be used to modify viruses to make them more lethal, more transmissible, and is going to cause pandemics that terrorists or nation states like North Korea or Iran use to cause destruction and death. Overall, we see a lot of new technologies that are going to be put to maluse. I've talked about cryptocurrency and biotechnology. Nanotechnology is another one. Self-replicating, small, uncontrollable substances may get out there and start eating up biomass and spreading. There's concern about that. It seems like every month I hear about Elon Musk warning that artificial intelligence poses a great threat. People defend that and they say, well, we can program computers not to harm humans. Well, yeah, you can, but bad people, terrorists, or lunatics like the Unabomber, they can program a computer to maximize killing people if they wanted to do that. And I worry about combinations. If you combine artificial intelligence with the Internet of Things, sensors that are out there, with blockchain that you can't shut down because it can't be hacked into, our electric grid vulnerabilities. You combine some of these technologies and terrorist groups, bad nation states are going to be able to cause a lot of trouble. There's also cascading effects. What happens if there is an earthquake that causes a tsunami that hits a nuclear reactor on the coast and causes a meltdown and radiation release? That's basically Fukushima. But solar flares can cause EMP, which can take down the electric system, which can lead to a stop in the economy, loss of law and order, and basically a collapse. Overall, what I see in technology like blockchain, biotechnology, artificial intelligence, is that the destructive power of an individual is increasing rapidly. Our economic interdependence and the complexity of our economy is going up, and blockchain is going to contribute to that as well. All that's going up while individual resilience and ability to get along when there is no electricity or the economy isn't functioning is going down. And the net effect is we are very, very vulnerable to a collapse. And that, frankly, is the reason that I formed Fortitude Ranch. At this point, I'm going to pause for questions. First, I'm going to answer the question I always get first, which is, should I invest in Bitcoin? That's what everyone wants to know. And my answer is that I'm going to basically waffle on you. I'm not going to give you an answer. Bitcoin is absolutely not a Ponzi scheme. The CEO of JP Morgan said that a few months ago, and that's nonsense. Bitcoin is perfectly legitimate. It's a great technology. It's a great means of exchanging money. But what Bitcoin really is, in my opinion, is it's a digital gold. It has huge value because people think it's a safe place to store money. They trust it more than even the US dollar because they're concerned about our huge deficit. Is the US dollar going to collapse in value at some point? People have more faith in Bitcoin. There's a limit to how much Bitcoin will be produced, so you can't have massive inflation is the belief there. And there are a lot of examples of this. Gold, real gold, it doesn't really have the value that dollars put on it for real use. It's valuable because people perceive it's a good place to store money that will hold value. Diamonds is another example of that, and the example I want to use here is when cubic zirconium came out in 1977, since you can't tell cubic zirconium from diamond, and the major use of diamonds is jewelry, my thinking was, as a rational person, well, the value of diamonds is going to collapse. People will switch to cubic zirconium. But not only has that not happened, the value of diamonds has continued to grow up massively. And the reason is people believe diamonds are a good store of value, that I can put a lot of money into it, have use as jewelry, and I can always sell it off at a higher increasing amount of money. And if people believe something to be true, they believe gold is a good store of value. They believe diamonds are a good store of value. They believe Bitcoin is a good store of value. It's a self-fulfilling prophecy as long as people believe that. So Bitcoin gets clobbered all the time. China says we're not allowing Bitcoin. Price of Bitcoin goes down 20%. And then what happens in the next day or two? People see a buying opportunity, they jump in, and the price just keeps going up. That could continue forever. The problem is there are other blockchains out there. There are other cryptocurrencies. China, for example, could decide to issue its own digital currency. And if things like that happen, as they continue to happen, the value of the Bitcoin blockchain will decline, and you could reach a point where sometimes people realize, Bitcoin was fantastic for developing blockchain technology. It's definitely not the best blockchain today. There's other cryptocurrencies. Maybe it's not such a great store of value. And if something like that happens, and people massively start believing that or fearing that, you could have a huge collapse in the Bitcoin price, which is why I'm not a Bitcoin investor, but trying to predict that is impossible, so that's why I don't give advice on Bitcoin investments.